Hey everyone, Chris Haddon, Jason Balin here with hardmoneybankers.com. Today we are discussing the 3 key numbers you absolutely must track in your real estate investing business.
We're going to talk about marketing stats, profit and losses, and even cash balances per property so you know how much money you have for every rehab project. Check it out right now.
All right, when talking about tracking stats and the important numbers in your business, let's start at the front. Let's start at the beginning, the front door, the marketing side. How would you go about that exactly? Say you have marketing campaigns that you're paying for, maybe some that you're not. Where does it start exactly?
I mean, we've done lots of videos related to marketing for real estate investors to find deals directly with sellers. If it's direct mailing pieces, online marketing, door knocking, scraping MLS, whatever it is. Let's use, for instance, direct mail because it's very easy to track, and you know exactly what the cost is, and it's obviously probably, in our opinion, the best type of marketing to begin with. You get the best response rates. Yep. So, for instance, first, what we like to track is how much it costs per piece. So, for instance, let's say we're sending out 2,000 marketing pieces at 50 cents a pop, $1,000, pretty simple math. Something like that, you'll get 2 or 3% return on.
That means calls
on,
just like inquiries,
interactions with you.
Got it.
So what's that, 50 or something? 50 inquiries turns into about 10 to 12 or 15 leads, turns into 1 deal. So in this particular scenario, it would cost you $1,000 to purchase a property.
Okay, I seen you had done those numbers before. Thank you, because I was trying to go through.
Well, we know what these numbers are internally, and that's just one example.
One of our campaigns. But yeah, I mean the same thing applies in anything you're looking at. Like, what's the total cost? How many calls you're getting from that, or
that's
web
right.
forms, whatever it may be. How many actual contracts you're getting from that, and what does that break down? So, what are you spending in order to get a property under contract?
Exactly, and then you have that metrics, and you know how to scale. I mean, and I'm not saying that it's always going to be a line like this, but in theory, for every $1,000 you spend on direct marketing, you should be able to do one deal. And then you kind of have that metrics per marketing campaign, and then you work itself into other marketing campaigns. Some may be higher, but you get better, quality deals. Some may be lower, and you get more of them. Whatever the case is, you need that metrics, and you just need to track things. And that's just the 1.0 tracking. You can obviously black belt that in the future. But this is a good place to start.
But even the basic version is probably a step up for a lot of people who are currently marketing and paying to market in the real estate business. I mean, knowing which campaigns are giving you the best returns, the best ROI is really, really important, because you might be paying $1,000 to get a property under contract for mail, but you might be paying $5,000 on PPC, for example, and maybe you don't even know it.
Most investors don't track this, and they don't know. They're chasing deals. They're getting stuff from all over the place. If you ask them the question of, how much does it cost you to acquire a property, they wouldn't know that answer. And it could come to the point that some marketing campaigns are just costing extremely too much, and it's like, well, you're breaking even on this thing, and you don't even realize it. And on the other end, if it really is only costing $1,000 to buy a property and you're making huge profits, why not spend more money on that?
Absolutely.
At that same time. And it all goes back to, this is a business, and you need to spend money on marketing and treat it like a business if you want to stay in business.
Absolutely. Real estate investors should take a page out of internet marketers' book in that one, because they know their cost per acquisition. You should too. Any kind of business definitely should. All right, moving on. The elusive cash balance per property. Now what that means is exactly what it sounds like. For each property in the portfolio, whether it's a flip or a rental, you need to know how much money you have in the bank for that property, for the budget. If it's a rental, you're going to have a positive balance. You should anyway, from the rent that comes in, and then your expenses like your mortgage and your taxes go out, and you're sitting with a balance. At the end of the year, you need to know what to do with that. You're paying down principal. Are you paying out yourselves? Are you just kind of breaking even on the property? You need to know that per property, and that's what we ran a quick report from our software. And that the problem is, it's not the easiest thing in the world to do, because as I've discussed before, I'm not going to go too in depth with it now, but when you're doing accounting for real estate, you're getting away from the income expense world. Like, if you're a lawyer, you have fees, you charge fees, and then you pay out your expenses, and you have a net. Very, very simple accounting wise. Real estate is a different animal when it comes to accounting, and it's complicated, and people don't know, because they understand what real estate is. It's such a straightforward thing. We all live in real estate, for example. We all drive by it. You can touch it, you know it, you understand it. You don't realize how complicated the accounting is going to be. And your CPA will tell you, no, it's fine, it's no big deal. Well, to them, to them it's easy. But to most business people, getting to something like that cash balance per property, which is, in my opinion, the most important stat in order to run a real estate business, is very hard to get to. Yeah. And it's a problem.
It's the most important stat. I agree with you. And we've spent so much time, energy, and resources on it over the last few years to really make sure we've dialed that in, because we all get it. Accounting is not sexy, but making money, being profitable, and knowing exactly how much money you make on a flip is sexy. So you can't fully outsource that. You need to have some, you have to wrap your hands around it and grasp part of this. Take the word accounting out of it if you want to, and just call it, how much cash I have, what are my cash balances. Call it whatever you need to call it in order to be interested in it, because you need to know how much money you're making in every deal. And this is really the only way to do it. In our flip software, we do cash balance for property, so we know how much we have left in our construction budget. Because if we have $10,000 left and we know it's going to cost $15,000, you need to kind of reevaluate. How am I going to make up that difference? Am I going to cut costs somewhere, or am I going to take money from my operating account or from other sources of money in order to kind of fill that gap? So, and I know for a fact that the majority of people that are watching this have no idea how much money they have related to a project, and specifically where they're at each construction number, because you're using Excel spreadsheets and you're using QuickBooks, which do not work.
Lose that in QuickBooks. When you merge in that balance sheet world with your cash balances, it's very, very easy for that number to get lost, so be careful. And the tricky part is you can't really ask a CPA, because in my opinion, you're not going to get the right answer.
Yeah, every investor doesn't know how much money they're making until months down the road when their CPA values it, which, how do you run a business like that? Right. So there's a very simple solution, get software like Sage Contractor 100 we use for our flips, we use Yardi for our rentals. There's other software similar to that, but you have to, you have to be on that every day. How much money you have, how much money you have, how much money you have on everything, and the cash balance per property matches identical to your bank account, so you know exactly what that is.
Exactly right. Exactly right. And my advice would be not to ask your CPA, but to ask a commercial real estate professional, a finance guy who is tracking that number, and how he would do that, he or she would do that in your business. That's where I would go for that information.
Or comment below on these videos, and we're happy to give you any insight we have, because we've really concentrated on it, and it's really heavily impacted our business in a positive way over the last few years.
Absolutely. Absolutely. And moving along in that direction, along with these software upgrades and accounting upgrades that we've made, we have much better data on the profit and loss. Some accountants might not like that word because it can be confused with balance sheet in their terms, but how much money you're making, let's call it that. How much money you're making per property, how much money you're making on the whole portfolio. We're talking flips and rentals. We've gotten much more dialed in on what that is. And it's a moving target too. That changes every time a property sells, or you buy a property, or a rent check comes in. So that moving target is something that you really need to make the right managerial decisions in your business. And it's also a difficult thing to get to for the same reasons I mentioned before.
Yeah, and also kind of figure out how much money you want to make and work backwards based off of your P&L. I mean, a very important metrics that we look at is how much money we want to make on a particular deal, and we do it by a percentage. And we've preached this before, and there's lots of ways to do this, but we like the 20% mark. So for every $150,000 that we've allocated to a project, and we're in on a project, if it's our own money, private investor capital, banks, whoever the case is, just costs associated with it, we want to make 20% of that. So for every $150,000 out, we want to make $30,000 in. So when you're running these numbers, and all of these metrics come back to one, and then they turn into a P&L at the end of the game. You want to figure out how much money you're making and saying, wow, I'm making more than 20%. I'm making a lot. Maybe I can, buy more aggressively. In order to buy more inventory.
Spend more on marketing.
Or on the other end, it's like, oh crap, I made $5,000 on this project and I had risks up to $200,000 or $250,000. So if you can work backwards and you can figure out that percentage, and these are all very easy to do. There's nothing crazy about it. If you can figure that out, then you can adjust accordingly and say, hey, whatever, I want to make 15%, or I want to make 25% of my numbers. So that's on flips. And on rentals, very similar. You can run a report based off of that, so you know how much your cash on cash return is, how much your monthly income is on each project, and so on and so on. But you can't do any of that if you don't have these reports. And I'm guessing that the majority of the people watching do not have these reports, because most real estate investors in general are solo operations, or smaller groups of investors buying properties together, and they're more concerned about other things than these, which this is 101 stuff. You can't really run a business without it.
Yeah, it's unfortunate that that's the case in this particular business. It's kind of real estate investors are screwed in a little bit by, like, they didn't know the accounting was going to be so difficult when they just wanted to buy a house. You know what I mean?
Yeah.
But it is. And it's something that needs to be treated very, very seriously. So, top 3 metrics that you absolutely need to track: marketing stats, know how much you're spending to get a deal, cash balance per property. So as you move through a project, a rehab project, you know exactly what you're spending on that. You're not just, sending money out of your account until, there isn't anymore, or until the project's done and hoping it came in on budget. And a P&L for the property and for the whole portfolio. Constantly keeping an eye on those 3 metrics is going to cause you to have, number one, you'll be very, very aware of what's going on in your business, and you'll be able to make the right decisions.
Exactly. Hopefully this isn't new to you, but if it is and you have any additional questions, post on comments below. Be happy to help out and answer, recommend software, things like that. And also you got to do us one favor. Please like and share and review our podcast. Go to the iTunes store under podcasts. If you have an iPhone, literally just go to the iPhone and click on podcast and just type in real estate investing. It's the Real Estate Investing REI 360 podcast. Like it, which is subscribe, give us a review, hopefully positive, and then share it on all social media outlets. We'd certainly appreciate it.
Awesome. Thanks guys for watching. We'll see you next time.